Welcome back to RealPage Economy Express. As the calendar turns, the data is doing something interesting. It is not signaling a rebound, but it is pointing to a clear direction. Let's jump in. We start with the labor market, where December delivered another modest headline. Employers added 50,000 jobs, and the unemployment rate held steady at 4.4%. Stepping back, payroll growth in 2025 totaled 584,000 jobs. Wage growth remained positive but contained. Average hourly earnings rose 30 basis points back in December and are up 3.8% over the past year, suggesting incomes are growing at a more measured pace. That cooling trend becomes more visible when we look beneath the surface. The latest JOLTS report shows job openings holding at 7.1 million in November, but that is nearly 900,000 fewer than a year earlier, reinforcing the idea that labor demand is easing rather than accelerating. Weekly unemployment claims help round out that picture. Initial claims fell to 198,000 in mid-January, and the 4-week average dropped to its lowest level in nearly a year. The insured unemployment rate held at 1.2%, pointing to a labor market that is cooling gradually. Turning to inflation, the December CPI report stayed consistent with that theme. Headline CPI rose 30 basis points on the month and 2.7% over the past year, while core CPI increased 2.6%. Food prices were up 70 basis points in December, and energy prices rose 30 basis points, keeping overall inflation contained. Upstream price pressures tell a similar story. Producer prices increased 20 basis points in November, driven largely by energy. Core producer prices are now up 3.5% over the past year. Housing data continues to be mixed. Residential construction softened in October, with permits slipping slightly and starts declining 4.6%. At the same time, single-family starts rose more than 5%, and completions increased modestly, though they remain well below last year's pace. Existing home sales offered a brighter spot. Sales jumped 5.1% in December to a 4.35 million annual pace, the strongest reading in nearly 3 years. Inventory tightened to a 3.3-month supply, while prices rose just 40 basis points from a year ago. Mortgage activity responded quickly to lower rates. Applications surged nearly 29% last week, with refinances up 40% and purchase activity running 13% higher than a year ago. The average 30-year fixed rate dipped to about 6.2%. Finally, consumer sentiment edged higher again in January. The index rose to 54, marking a second straight monthly increase, though it remains well below long-run averages. Stepping back, the message is pretty consistent here. The labor market is cooling, inflation is contained, housing is stabilizing, and lower rates are starting to show through in activity. We'll keep tracking how these trends evolve. Thanks for watching RealPage Economy Express.